Okay, it is Thursday, the 10th of July, 2025, and what you're looking at right here is a 5 minute chart of the MNQ, the micro NASDAQ 100 futures contract. And this purple shaded area here was the pre market action starting with 6 p.m. last night and finishing 9:30 a.m. And this is today's New York session, 9:30 a.m. to 4 o'clock p.m. So there's a little thing called box theory out there, and box theory is just simply that the vast majority of the time, if you look back at the prior session's trading range, when you get to the high, that's a premium area. That's where there are the most number of sellers historically, recently historically, in the market. So it just only stands to reason that that would be a sell area unless someone proves otherwise, and vice versa for the lows. So the idea is before you even start trading for the day, just go to the prior day's session and put a box around the highs and lows of the session, and you will then have your trading range for the day and know that when you're towards the top of this shaded area, this blue shaded area, you're going to be selling or looking for sales, and when you're at the bottom, you're going to be looking for buys. So um, that's just called box theory, and a lot of people just trade that way and trade that way only. Me, I need a little bit more convincing. I mean, generally that's my theory, but obviously I need setups. I don't just blindly buy or sell at the highs or lows of the prior session. I need setups. So today, when the market opened, I'm going to take this off just so there's less on here. But when the market opened, the theory was that I was looking for shorts. It peekabooed just above the pre-market high here, which was actually right here at 77, just briefly at the open, and then it turned around and headed down. Now, for about the next 5 or 10 minutes, it kind of waffled, and we weren't sure really what it wanted to do. I was kind of waiting to see. I would have been interested in going for a buy if this third 5 minute candle had finished strong, but it didn't. So I wasn't really interested in buying. I did take a short in the zone, but I was just a little bit early, and I kind of got out break even. I'll show you where I got short. It was a real quick trade. I was kind of in and out real fast. I think I went short around 31 right here, and it just kind of bounced around. And then I got out break even. And then just a couple minutes, just a few seconds later, actually, it did the first definitive push down under that area, under that 26 support, back tested it, and then headed down strongly. So what I did for my next trade was this was to me the first. Well, the first big move of the day was this move, but that was pretty choppy. That was the first 5 minutes, first 3 4 minutes, and a lot of wild gyrations in that one. This one was a little bit more smooth, right? So this one, when it started to rebound, I went ahead and put a Fibonacci box on it with an upside down Fibonacci box. So I took the move from the low to the high and measured that, and this is called the pocket or the golden pocket here between 50% and 61.8% of the move. I went ahead and got short at 23,008 right here after I saw that it was rolling over, and took it down just above. This bounced pretty fast, and it got out about 82. That was my first trade. The price kept moving down towards the bottom of that range, right? The bottom of that range was from the prior day was what? It was right here at Wednesday low. I've got it marked right here, Wednesday low. See there, right there? That's 22,917. And I was just, looking for it to create some structure around that area, because I thought it was a pretty good chance that they'd buy it back up. And so what they did is they bounced it off yesterday's low at first, but I wasn't convinced that was a trade I wanted. Although it was pretty good. I mean, if you're good at that kind of stuff, that was a good trade. And it went a good solid 17 through 50, 35 points. But I was waiting for something a little bit more structured than just a bounce off the yesterday's lows. So it came back down and bounced a little bit off here, the 22,900 big round number, and then started working its way back up. And that's when I saw it kind of hesitating up here. So I put in a Fibonacci box just for this little move and let it come back to the 50% level, which coincided with that area where it first bounced yesterday, almost to the tick, maybe 1 or 2 ticks off. So as it started to hold that area and go up, I went ahead and got some right here at 926, and I rode it up to just below 950. And that was my trades for the day. Yeah, I mean, box theory really, it's valid. You know, it's valid because the market has already proved to you from yesterday's price action that the greatest number of sellers are in one area and the greatest number of buyers are sitting in another area. And so when the market opened, it did sell down from the top and they did buy it back up from the bottom. And that all happened within the first 45 minutes. After that, it's anybody's guess what it's going to do. It kind of chopped around and kind of moved up, end of the day, right in the middle. So that's what we had for today. Today was Thursday, July 10th. And hopefully your trading day was good. And I will catch you on the next video.